Good evening, good evening, good evening, everybody. How y'all doing? How y'all doing? I appreciate everybody that reached out to remind me that I was going live tonight. I guess that's why they say be careful what you ask for. Be careful what you ask for. But I appreciate y'all. Shout out Run the Green, man. I appreciate Run the Green. If y'all don't know, let me put Rhonda up on a pedestal for a minute. Rhonda has been, when she be taking her notes for the live streams I be doing, she's been going in, putting in a comment with timestamps on it. I had started trying to pin the comments, and then I thought about it. I was like, hey, I could just copy her comment and put it into the section where it puts it under the video. And I think I did that. Matter of fact, let me check that before we get into our what's the name for the evening. Let me check that and see if it did it. Because I think that's where you're supposed to do it at. I've never done it before. So we're about to see. I think she did it on this video right here. I think she did because she had just did it on. She had just did it on a recent video. See, that's the comment right there. I don't see it. I don't see it. Because I copied it and put it. I copied it and put it in. I guess that's the way you don't put. I guess you don't put it there. I got to figure out where to put it. Where I was putting it, I thought it was gonna put it under the video. You know how when you go to people's videos and they have stuff up under the bottom down there? I thought that's where it was gonna be. So now I got to figure that out. But as y'all see, let me try to see if I can pin that comment. As y'all see it, there you go. So that's what I have been doing. I have been pinning the comment for people like they went back and looked at it, but I thought I was putting it under here. I got to figure that out. I have to figure that out. Y'all already know I'm caught up now. Anyway, let me stop because I done got caught up. All right. Let me shout out to people I see in the chat. Then we're going to get right into it, man. What's up? Oh, what's up, Rhonda Green? I was just talking about you. What's up, Here to Learn and Share? What's up, Lil Hulk? What's going on, Kim? What's going on, Iraq? What's happening, Will? What's going on, Audrey? Audrey B. All right, then, man. Let's get right into it. Tonight, we are talking about, let's give them something. Nope, we're not talking about that. Let's give them something to talk about. We are talking about how to effectively backtest. We ain't gonna be effectively backtesting. We're gonna be effectively backtesting, right? What's up, Seawalk? What's going on? Even better, me. Now, when it comes to backtesting, right? When I initially started trading, you know, I would go into Ninja Trader and I would go into I hate when alerts, the bubbles be driving me crazy. Do bubbles like you see I had that alert bubble up there on my phone? I promise you, I cannot stand. I be clearing bubbles constantly. Bubbles drive me crazy. What's going on, Thomas? Bubbles drive me crazy. Let me hide this. All right. Okay. When I initially first started back testing, right, this was me. Right, this was me. I would go into NinjaTrader. I would, go into the playback mode. Like you got the replay mode and trading view here. I would go back to a day. We're just gonna say, let's pull this up. Let me get this together. Let me get myself together. So we're gonna go back to Tuesday, Thursday. Okay. Okay, Friday. We're gonna go to this Friday right here, right? So I'll just go back to the day. 6 a.m. Put it at like 8 o'clock, whatever. Right. And then I would just, let the day play out. You know what I'm saying? And I will go in and I will try to trade. One thing I like about, NinjaTrader, you see how these candles are just like click. These are hourly candles, by the way. I'm gonna go to something more realistic. So let's go to a 5-minute time frame. All right. Go to a 5-minute time frame here. And I would just go there and I would let it play out. And these candles here, and I would try to go in. I'll be like, I'm gonna get long right here. You know what I'm saying? I'll put in my order, put my stop down here, and then see if I'll be going, I got stopped out. You know what I'm saying? I would just try to go, that's what I would do. I would go in and I would just try to trade that day. I got stopped out. I was wrong. Blah, 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 blah. Make some little notes, do, right? Now, in my humble personnel opinion, that's not effective, especially if you're trading. Hey, I thought I turned all those off. Wait a minute, was it? I know I ain't tripping. I know I turned all these off. Okay. All right. So, in my humble opinion, that's not effective, right? Now, let's talk about how to effectively backtest. Now, this just doesn't pertain to ICT concepts, but that's what I trade. So that's what I'm going to relate it to. It can be whatever you choose as your trader, right? So first thing you want to do when you get ready to go back and backtest, right? Have one entry model that you are gathering data for. You want to have one how to effectively backtest. Right? Okay. So one, you want to have one entry model that you're gathering data for at a time. Just one. Don't try to study everything when you're backtesting. Backtest one singular model, entry model, right? one singular entry model. Okay. 2. Right. 2. I probably should have thought this out throughout the day. Y'all know I speak extemporaneous, so I'm gathering my thoughts here. I know what I want to say, but I'm just trying to figure out how to say it in an in a teaching type way. So have one model that you're looking at. 2, use hindsight as your fake bias, right? Use hindsight as your fake bias. I'm gonna explain that in a second. Y'all probably think like, Tim, what were you talking about? Use hindsight as your fake bias. Okay. Study every time frame. Is time frame one word? Every time frame study every time frame for successful and unsuccessful trades. Unsuccessful trades where the model appeared. Now, somebody remind me when I get to 3, I want to emphasize. Nope, I do this. I'll do this. I'll do it right now. This is going to be 4. This is going to be 4. Now, 3 is going to be only study successful trades of your model at first, right? Only study successful. Then 4, we're going to say study every time frame. Study every time frame for each day. Each day, the successful why do I keep putting that E over there? The successful trade happened. So that every time frame that the successful trade happened. All right. And then we're just gonna go to 5, and that's gonna be it. Now you want to study 9 days unsuccessful trades happening. And the model appeared. Okay. Right. This is our there's a link if you want to click on the there's a link if you want to click on the I'm popping the voice. All right. Drop that right there if anybody want it. If anybody want the screenshot. If anyone wants the screenshot, there it is. Okay. That's our talking points. Now, get out of here, talking points. I got you over there. Now, so what? Why is the screen getting bigger, but you know what? I'm going to have to. Oh, that sucks. I'll do this. I'm gonna do this. Do it. Do it. Do it. Do it. Do it. Do it. Do the roar. Do it. Do the roar. Download the image. Do the roar. Do it. Download the image. Image is there. Now, if I put the image over there, put the chart there, I can make the image bigger. That's what I was trying to do. That's what I was trying to do. You hear me? Okay, so now, first things first, you want to have one entry model that you're gathering data for. You don't want to be all over the place when you're back testing. You want to be laser focused because you're trying to collect data to see how you can get your statistical edge, and just going back in time and trying to trade it is not effective, right? That's the equivalent of taking your 12-year-old son or daughter who has never driven, but they've sat in the car and watched you drive for all 12 years of their life, and then putting them on the expressway, putting them on the Autobahn in Germany and saying, here, drive. You've been watching me. We've been talking about driving. So let's go and practice. Here, drive. No, they don't understand anything. You don't understand the model. You don't understand how price move. So you're going out there and you're going to frustrate yourself. Or what you're going to do, like what I did, when you go back in time, right? You can't help but see what has happened already. I used to try little tricks where I would come and I would squish the chart all the way up to like a flat line where I couldn't see what price did, then go back to a day, and then, you know what I'm saying, try to trade like that. But guess what? I was never confident in the trades. I'm just guessing because I don't understand the model. I don't understand how price, I don't understand nothing. I'm just going back and I'm doing what somebody told me to do. Now, when you go back in time, see, that's you want to have one thing because you're trying to gather the data on it. The purpose of back testing, you're gathering data to prove your statistical edge. Okay. Use hindsight as your fake bias. Okay. Use hindsight as your fake bias. We're going to walk through today. We're going to walk through today. Mark out today. Thursday. Okay, put it at 9:25. And we're going to go over here to 4:05. All right, walking through today. Okay, walking through today. Now, we're gonna since we're going through today, since I'm just doing us off the whim, we're going to say that our model is going to be a 15-minute a retrace of retrace back to a 15-minute fair value, a 15-minute fair value gap trade. That's what we're looking for to the upside. Keep it simple. We're looking for a 15-minute fair value gap trade. You know what I'm saying? That's what we're looking for. That's the model that we're looking for right now. I just looked and I see that there's a 15-minute fair value gap trade right there. That's why I said that. Okay. So when I say use hindsight as your fake bias, right? What I mean there is looking at today, right? I know the model that I'm looking for, right? I know when I sit down in front of my charts, I'm looking for a 15-minute fair value gap trade. Well, let's put a little bit more criteria in there. A 15-minute fair value gap trade that yields a minimum of 10 points, right? This right here is 18, like just say almost 20 points, right? So we're looking for a 15-minute fair value gap trade that yields at least 10 points, right? That's our criteria. $15-minute fair value gap trade that yields not before E except after C tempting 10 points minimum. Cheese and rice. What's going on with my fat fingers today? This is our criteria. That's our criteria right there. That's our criteria right there. Okay. Now, this is our criteria. And we get in front of the chart and we sit down and we looking through the days and we starting on the 15-minute time frame because we say, hey, we want our model, and this is very simple and stupid. This ain't no detailed model, so don't shoot me for that. But our model is 15-minute fair value gap trade that yields at least 10 points minimum. So we sit down at the 15-minute chart first, because that's our model. That's, you know what I'm saying, our model. Whatever your model is, when you sit down in front of the chart, start looking for, you know what I'm saying, something about your criteria that tells you it's go time. Your trigger. Start looking for your trigger in the price action. You know what I'm saying? Whatever time frame that is, yada yada you, right? So if you're looking for something based off of a hourly liquidity sweep and a liquidity opposite liquidity sweep on the hourly, you're gonna start out on the hourly and see, okay, look like we ran liquidity on this day. Okay, boom. Then you'd be like, okay, it has to, you know, retrace back to a 15-minute breaker. Then we go back to a 15-minute breaker. Oh, yeah, we went back to a 15. Okay, I can use this date. You're using hindsight as your fake bias, because you're going to look and see, hey, it was a sale day. So on Thursday, January 25th, my bias was bearish. This is just a way of I'm giving you some notes you can put in your journal. On January 25th, 2024, I had a bearish bias for the day based off of how we had traded the day before. We had a massive attack of buy side liquidity the day before. We had a massive attack of buy side liquidity the day before, and I was anticipating a retracement back into the range, either back into the range or attacking the sell side, because we were in extreme premium, whatever. You know what I'm saying? Use hindsight as your fake bias. Journal it. You know what I'm saying? Journal your fake bias based off of hindsight. Whatever the candles did, go in and put that down in your journal as if you saw it. Document everything you see, put it in your journal as if you saw it. What this is going to do, this is going to trick your brain into thinking you know this. It's going to trick your brain into thinking you know this. And I know that may sound counterproductive, but it don't. Think about when your child was younger. The only thing they did was parrot everything you said. They just parroted everything you said, and they eventually started to know it on their own. They eventually started to being able to use their own like thinking process to problem solve, because of parroting things you said. They started to understand the things they was parroting, and then they started to understand how to problem solve. And you know what I'm saying? So you trick your mind into thinking you really did have that bias. You really did. You were bearish on the day, because this you start to, when you start to see it over and over, it starts to click, right? So now we're using hindsight as our fake bias. Okay. Only study successful trades at first. And the reason why that is because you want to become very, 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 very familiar with what the setup looks like when it works. You want to be uber familiar. When you see it, you want, just like when, think about it, like sitting in the stands at your child's event. It is 250 kids on the stage, on the field, no, I don't care. It's a bunch of them out there. But you know your child's walk. When your child walking out, everybody looking around, where he at, where she at, and you see that walk. Oh, there they go right there. There they go. You sure? That's them. That's them right there. Right there, because you know your child's walk. You want to be so familiar with seeing a successful setup of your entry model. You know it when you see it. So you're only going to study the successful trades first, right? Get it down pat. Then I'm going to come back to that, right? I'm going to come back. Then we're going to jump to 5. Then we're going to come back to 4. Once you do 3 and 4, once you beat it to death, then go to 5 and start looking for when you saw a 15-minute fair value gap, right? It reacted off of a 15-minute fair value gap and it got stopped out. Start digging through price and look for when it hit a 15, whatever your model is. But our model is a 15-minute fair value gap. Start digging through price and find when you saw it hit a 15-minute fair value gap and got stopped out. Right, like this right here. Right? For anybody who can't see it. Right in there. That's a 15. We went up, came down to the 15-minute fair value gap right there, right? And got stopped out right there. Because we went up, we would have been buying. So, well, no. Yeah. We went up. No, so we got stopped out up here. So we came down, right? 15-minute fair value gap, went back into it, right? We got short. Our stop would have been up here, right? We went up, almost got stopped out, came down, got stopped out, right? So start going through and finding trades where your setup showed up, but it failed. And then once you find those, then you're going to go back and do 4. What we about to 4 is going to be the meat and potatoes, right? So you're going to have 1, 2, 3, 4 for all successful trades. And 4 is we about to deep dive into 4. And then once you do that, once you get it very, 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 very familiar with your setup, then you're going to go back and find unsuccessful ones and become very, 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 very familiar with what it looked like when it failed. You want to know you late. We just starting. Yeah, you ain't miss a whole lot. We just starting, right? So again, 1, 2, 3, and 4. Only with successful. And then once you get very familiar, you're going to go through and study the unsuccessful ones also, so you'll know what it looked like when it fails. Right? Now, Lump, if you once we get done, you can just hit me and I'll just walk you through the little bit you missed, or you can just run it back and watch the replay. Okay, so we coming in here. We already got our bias. We know what's up. So then we're going to mark out. All right, we're going to mark out where the trade transpired. Right? Where the trade transpired. Okay. We're going to make sure we see that on all. Usually I show it only on the time frame and below, but we're going to show it on all time frames, because we're going to study. We want to study all the time frames. Now, however you want to study the different time frames, that's up to you, right? You can go up, you can go down. however you want to study the different time frames, that's on you. So we're going to go up first. Since it's intraday, you know what I'm saying? You can go as high as you want to go, but only go as high as it makes sense to. You know what I'm saying? It for intraday trading, you ain't got to go all the way up to a weekly candle. You know what I'm saying? You go up to an hourly, you can peek at the 4 hour to see if it interacted with any 4 hour levels. Okay. So what you do when you move through the time frames, right? You want to take copious notes of what price did on every single time frame before, during, and after the trade. Right? Before, during, and after the trade. So what I do, since the higher time frame take precedence, I start up and then I go down. Right? I start up and then I go down. So go up to the hourly time frame, because we look for a 15-minute fair value gap. You know what I'm saying? That a retrace to a 15-minute fair value gap that yields 10 points minimum. Right? So go. I got the day marked out. Let me, in case y'all can't see the day lines, I got it kind of squeezed up. Right. So that delineates the New York trading session for today. So now, for example, on this day here, you're gonna take notes about this. So however you want to journey, 60-minute time frame, right? Let's do it. Let's do it. 1, 25, 24, 15-minute fair value gap. It was a bearish fair value gap. Bearish fair value gap. Retrace. $60-minute time frame. All right. So, okay. First thing I noticed, I don't need that right there no more. So I'm gonna move it. Okay. So on the 15-minute, on the 60-minute time frame. Okay. Okay. It's 10 o'clock. Okay. So on the 10 o'clock candle, all right, the 10 a.m. candle, the 10 a.m. candle traded back into the 1 p.m. SIBI from Wednesday, traded back into the 1 p.m. SIBI, 1 p.m. SIBI from 1/24/24. All right. Then Price traded back down into the 8 a.m. busy. No, we are. Yeah, right there, because that's my short right there. Price traded back down into the 8 a.m. busy on the 12 p.m. candle. So, all right. All right. 2, 12 p.m. candle traded back down into the 8 a.m. busy from today. Yes. Traded back into the 8 a.m. busy from today. All right. The 1 p.m. candle retraced the 1 p.m. candle for this piece right here. We're going to have to verify this, but I'm just going to say it and then we'll verify it and then change it if need be. And I'll tell you what in a second. The 1 p.m. candle, the 1 p.m. candle retraced back into my 15-minute bearish fair value gap and traded down to the 7 a.m. order block. The 7 a.m. bullish order block from today. And then you can put something in there like, you hit your profit target of 10 points. The trade actually yielded 18 points because we measured it out already. Now, the part I need to verify is if it retraced back up first. And I'm assuming it did because I put this box to win. That was the reason why when we was on the 15-minute, right? When we was on the 15-minute here, I pushed this over to I pushed that over to the beginning of the like this is the thing. I put like that right there would be the beginning of this 1 p.m. candle on the 15-minute. And if I put it to the 1:15 candle, it's putting it to the end of this candle that went into this SIBI, right? If you don't understand what I'm saying, on TradingView, when you pull it over to the candle, it's going to the start of that candle. If you want to move it to where price was at the end of this candle, you have to go over to the next candle because that's the start of this candle. So now you're going to include all of the price action for that 15-minute candle right there, right? So since I know in the first 15 minutes of this hour, we hit that BISI, I mean that SIBI that we was looking at. That's why I said price, the 1 p.m. candle retraced back into my 15 fair value gap and then traded down into the order block, right? Because I knew it went up first because I highlighted just the first 15 minutes of this candle right here. If I would have highlighted all the way over here, then I wouldn't have known when it went up there, like conclusively, right? So now that's 1 hour. Walk through everything that price did on the 1 hour. Now, wash, rinse, and repeat, right? On the 15-minute, wash, rinse, repeat. I don't want it to be super long, so I'm not going to type everything out now. I'm just going to talk. Okay. I'll do this right here real quick. If anybody wants this right there, if anybody wants this, trying to get a good place to put this. All right. Copy. Nope. Copy link. All right. Probably waste a bunch of time. Nobody probably don't even want that. Put it in the Discord. Okay. And then, like I said, you can add some other stuff on there too about like profit targets and all that right there. Now, move out of the way. So go to the 15-minute time frame. So now on the 15-minute, we still have everything that we marked out from the hourly, right? And then so on the 15-minute, you're going to look at what price did on the 15-minute. And here we can see the only thing, like you would put something like you left this breakaway gap on the 15-minute, right? You can put something like you left the breakaway gap up there. Yeah, you can put something like you left the breakaway gap up there. On the 15-minute, you can All right, you can say, okay, yeah, we got the breakaway gap. That's it up there to the upside. On the 15 minutes, you can say, like the price consolidated from the price consolidated from 9:30 up until 12. Price, you can annotate, price was very indecisive or choppy from 9:30 to 12. We didn't show a clear sign of any direction, just talking through what the candles are doing in here, right? As we, you know what I'm saying, as we approached on 15 minutes, as we attacked the 1 minute SIBI, I mean the 1 hour SIBI that was above, right? We attacked the 1 hour SIBI, closed above it, right? Indicating a sign that the price may be bullish on the 15 minute and maybe reaching for the 15. Matter of fact, y'all remember we talked about this morning. I said there's no higher time frame imbalance above, so reaching that is lower probability because you had the hourly fair value gap there. Hey, let's check that 4 hour. You had the hourly fair value gap there. We talked about it. We having the consequent encroachment of the 4 hour wick, right? Looky who stole the cookie. You can put that in there. We went above the wick of the we went above the consequent encroachment of the 4 hour what was it? The 10 a.m. wick, the 10 a.m. liquidity raid for the 4 hour candle when we had the liquidity raid on the buy side because it got a long wick. We traded back into the consequent encroachment of that. You know what I'm saying? You can annotate that, and then price kind of stalled out up to 12, whatever, right? You annotating all this stuff here, right? Because when I be looking at, remember this morning, a lot of people probably didn't understand why I was a lot of people probably didn't understand why I was looking at the consequent encroachment of that wick. A lot of people probably didn't understand what I meant when I said there's no higher time frame imbalance above price. So getting to that 15 minute is lower probability because the hourly is the highest time frame imbalance that's above price right now. Here it is in hindsight, but we talked about this morning at 9:30 this morning, right? When price was right here, right? When price was right here, we talked about this. And now, and I don't have a crystal ball, but because I do stuff like what I'm telling you now to do, how to effectively backtest, right? How to effectively backtest, you know, today is, y'all see, it's a good example of what watching price can learning to watch price can help you with. So we went to, you can add something like we went to the, we hit a 4, went to the consequent encroachment of the 4 hour candle where we had the liquidity sweep, right? This liquidity sweep right here, that's part, that right there. This is the liquidity sweep there. Tim, how do you know that? This is a 10 o'clock candle. That's when the 4 hour 10 o'clock candle opens. We went up all the way up there. If you see right here, this high, that's the high right there on the 15 minute, right? If I just come in here and move that over to the side, wrong one. If I just move it to the side, you'll see it go up there, boop, and it matched right there. That's the high, right? That's the high. And then right over here, this 145 candle right there, that's the close. And if you look at that dot right there, it lines up with that close right there. That's the close of that 10 o'clock candle. So that right there was the liquidity sweep. That was the liquidity sweep there. We went up there and woof, look at how it came down. Woof, and it closed right here, right? That was the liquidity sweep right there. That's what the liquidity sweep looked like on the 15-minute. On the 4-hour, it's just a really long wick, right? That doesn't tell you anything. But on the 15-minute, it gives you a whole lot of context of what transpired over that 4-hour time frame right there, right? We went up, hit liquidity, pulled back down into an imbalance, went up, hit liquidity, dropped. This right here, for extra credit, can somebody tell me what this is, right? Where's the pencil? Where's the pencil? Is there a pencil in here? A drawing tool? Do anybody know if there's a drawing tool in here? Brush. Can anybody tell me what this is right here? What does Michael J. Huddleston call that? For extra credit, can anybody tell me what Michael J. Huddleston calls that right there? Okay. No. There are swing highs in there. 3 drives. There you go, Father Legend. 3 drives. That's the 3 drives pattern. The 3 drives pattern. What the 3 drives pattern is when we go into buy side or sell side, right? See these highs right here, right? And whatever is farther back, these highs, we pushed above them once, we pushed above them twice, pushed above it 3 times, and then we dumped. All right. That's the 3 drives pattern. That's a very likely sign of a reversal. When you push above a high or a low 3 times like that, you know what I'm saying, relatively close behind each other, 1, 2, 3 like that, and then you get heavy displacement down, you know what I'm saying? That's a what's the name? Y'all must be mad delayed. I just seen somebody pop in with 3 drives. Y'all must be mad delayed. Either that or y'all cheating. Okay. Now we got that out of the way. Then you just the same thing on the 15-minute, right? We came to the 10-15 candle, pushed up into the consequent encroachment of the 4-hour wick, the 10 a.m. 4-hour candle wick from 124. Price consolidated up until noon, where we had displacement down, taking out the short-term sell side. From the AM session. Man, price took out the sell side from the AM session on with the 12 o'clock candle, right? Blah blah blah. Push down into the 1-hour BSC, like we said before, right? You can even annotate whatever you want about other PD arrays. Then the 1 p.m. candle retraced back into my 15-minute fair value gap, where I went short at institutional order flow entry drill at whatever price that is right there. I could have just clicked on that. Institutional order flow entry drill at 49.15 even, right? I took the high the candle went to 49.16 1/4. I took a 1.25 heat on the trade, and then price delivered to my price target on whichever candle that you're going to use as your price target. 10 points. If you go 10 points, price delivered to my target on the 130 candle. If you're going to squeeze more juice up out of the turnip, and say you got 15 points, price delivered to my target on the 330 candle. You know what I'm saying? However you want to. Oh, I done knocked down my model weapons. However you want to word it. You know what I'm saying? Just different little things. And then you drop down 5 minutes. Everything that you know what I'm saying, then you walk through price on the 5 minute. Talked about what price did. Price started to rally at the 9:30 open. Price dropped. Price quickly dropped at the 9:30 open, forming a 1 hour fair value gap. How do I know that? This forming a 1 hour fair value gap with the 9:45 candle. How do I know that? Because that 9:45, that's the last candle before the hour change. So that's when this fair value gap was created, right? Price came down, quickly dropped down. The 9:45 ended up being the high of the 1 hour BISI from whatever that time was. I can't remember what the time was right now. Of the 8 a.m. BISI, right? The 9:45 candle ended up being the high of the 8 a.m. BISI. Price traded back up into that, whatever that back into the 1 p.m. SIBI from 124, and traded back down. You know what I'm saying? Whatever you want to do. Price then traded up to the 4 hour. Just all the detail you can about the 5 minute, and annotating every single PDA reaction. Consequent encroachment of the 4 hour wick, coming down, creating a SIBI, right? Displaced down, creating the SIBI. Did not take out the short-term sell side. Traded back up into the 1030 SIBI that was created. Traded down, took out the sell side below the took out the lows from the 10 o'clock candle, but left the lows from the 9 o'clock candle, right? Because this candle right here is 10 over to where we at inside 11 o'clock, went below the 10 o'clock low, left the lows that was created during the 9 o'clock candle, traded back up, pushed outside of the 1 hour SIBI from the 24th, traded above the 1030 SIBI from today, but the bodies of the candles respected the SIBI on the closing basis, right? These are 5 minutes, so we talk about the bodies respecting it. Displaced down after that, displaced down, taking out the morning sell side, the morning session sell side, right? Hit the BISI, retrace back up into the our 15-minute fair value gap, heavy rejection off of it. The 105 candle traded back up into the BISI one more time, this time trading above the consequent. First one traded up just below the consequent encroachment. The 105 counter traded in just above the consequent encroachment. Displaced down, taking out the low, creating another SIBI on the 115, traded back into that SIBI, traded all the way to the high of the SIBI to the tick, displaced down again, taking out the low into the low, just below the low of the 7 a.m. order bullish order block. Then price retrace, blah, 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 blah. Annotating every single thing that happened on the 5 minute, then go down to the 1 minute and do the same thing. Annotate every single thing that happened on the 1 minute, right? With notes for each time frame for the trade. It may take you multiple days to annotate everything that happened with this one trade. You know what I'm saying? You may get burnt out. You may not, you may be able to do it in one sitting, especially when you get to the 1 minute. It's, you know what I'm saying, it'd be a lot to annotate in the 1 minute over, you know what I'm saying, because you want to take as much notes as possible because you want to make it feel like you were there for real watching it. You want to annotate all, you know what I'm saying, all of these price moves and swings right here, right? At the 9:30 open, price broke down, had a bearish break in market structure. Price retraced back up, blew through the SIBI, taking out the short-term buy side, leaving the high price, you know what I'm saying, leaving the buy side that was created prior to open. Price displaced to the low again, taking out sell side, blew through the SIBI again, pushed up, leaving, made a lower high, touching the 1 hour fair value gap from the 24th of again. Price traded back down, right? Traded back down into a bullish order block, 1 minute bullish order block of the 947 1 minute bullish order block. Price displaced off it, finally taking out the buy side from the prior session, right? Retrace back down into a mitigation block, back into, wait a minute, that's actually a breaker, traded back into the 954 breaker, bodies of the candle respecting the 1009 BISI. Price soaked up liquidity inside the 1009 BISI until 1019. Then we got expansion up to the 4 hour consequent encroachment. Price worked the top of, worked in between the 1 hour SIBI from 124, the 10 a.m. 1 and the consequent encroachment of the wick up until 1031, where we had heavy displacement down, taking out the short-term sell side. We pushed through few BISIs there, left the sell side, left the external sell side of the price leg, retraced back up to the low, just inside the low of the SIBI from the day before. You know what I'm saying? Yada, yada, yada. You get it. Put down everything that happened because you want to know all the detail of what made this setup come to fruition. And with that, I yield my time. Thank you, thank you, thank you. You're far too kind. You're far too kind. Do anyone have anything for me? Anything for me? I would like to thank y'all for tapping into how to effectively backtest. Does anyone have anything for me? And when I go this time, I will remember to end the live. What's up, Father Legends? You popped into the Discord. Do you want to say something? You want to say something? Or you say, oh goodness. I will remember the end of line.
Yeah, you was talking this morning. I forgot exactly. I should. Can you hear me?
Yeah, I hear you.
You can't hear me.
I hear you. You can't hear me? It's light and green. I hear you fine.
What's the delay? I'm watching YouTube.
Oh, you watching the YouTube. Oh, yeah, I got it. I got it turned up so you can hear the YouTube, but I hear you fine inside the Discord. Can you hear me in the Discord? Or you on the same device?
All right, cool. So the question I had, I was watching a lot, or watching it live this morning, and you had mentioned something about price wicking into a fair value gap, and you said whenever you see that, that gets you to salivating.
Oh yeah, when I'm in
over that?
Yeah. When I'm in could y'all hear? Could y'all? I had the volume turned up, so hopefully y'all heard him. Could y'all hear what he was saying on the tube? While I go look for this, y'all put a 1 in the chat if y'all could hear him when he was talking, because I turned the volume up to okay. So what I was saying about that, right? When I'm in a trade and I'm right here, for example, right here. This is just a quick example that just I happen to see right there. I'm gonna put the market replay on like this right here, because this is where we trying to get shorted off of this fair value gap right here, right? These lows, this is like really close, but you get the gist of it. These lows right here, they're inside a fair value gap, right? They're inside a fair value gap. So when we trade up here and I know I want to get short off of this, I know I'm going to hold it at least to there, because I know this is a good liquidity pool, because this swing low is inside this fair value gap, meaning we came there before, right? Matter of fact, with this one here, this is when we made the fair value gap here. We barely got that out. We dipped into it and we went back up. So we've come here before. Anybody who didn't have their stop there prior to this has moved their stop there, because they're looking at this area as support, because we came here and it supported price. So anybody who may have had, just say if you had a stop down here and price hit that and we started going back up, they've trailed their stop up under this low right here, because they feel safe now. You know what I'm saying? They feel safe now. And so whenever I see like a swing low or a swing high that's inside of like this one right here, this is a swing high that's inside a fair value gap right here. That swing high inside the fair value gap. Let's just say if I got long over here somewhere, right? I'm going to hold it at least to there, because that swing high is inside a fair value gap, right? Even if I'd be like, okay, it probably could go up to yada yada you. I'm gonna hold it at least to there, because that swing high is inside the fair value gap. That swing low is inside the fair value gap. And then as we move price forward right there, right, we tapped it, boom, went through it. You know what I'm saying? Like that. That's what I was talking about.
So it provides you extra confluence as far in terms of liquidity then.
Yes. It's like that's like if I'm getting in a trade, or if I'm already in a trade and I see us heading toward a high or a low that's inside a fair value gap, I'd be like, yeah, I'm gonna hold it to at least there, right? Because like a lot of times once it get there, a lot of times we'll get like a big retracement off of it. We didn't get one in this case right here. We just kept digging in, You know what I'm saying? But a lot of times we'll get like a big retracement off of it. And you know, matter of fact, we came to the low of it, and that one is still, I ain't even noticed that one was still inside there, and we still came back to it again. You see that right there? I just noticed that there. Right, we attacked this one, then we went back to the fair value gap we wanted to get short off of. We came back down below that swing low again. That's inside that hourly fair value gap. God dog it. I just hit that thing again. I just noticed that. What did I do? I don't know what I just did. It hit something. Oh, switched the thing on me. But yeah. God dog it, Tim. Glad you'll bring me a napkin. What that? Ain't nobody in there. I gotta get a napkin. I'll be back, y'all. This real life, y'all. This real life. I done spilled water all over my desk. All over my. It got a little bit on my tablet. But does that make sense? Hello.
Yeah, that makes perfect sense.
Oh, okay. Okay. All right. Anybody got anything else? While I clean up my desk. Got to get this water off of him. I appreciate you pulling up with the hard-hitting question, man. I always tell people, ask your question, man. Somebody else in the community might have that same thought. And they're sitting in the back of the class being bashful. Ask your questions. Pull up with the hard-hitting questions. Hey, man, if nothing else, ain't nobody got nothing, man. We're going to go ahead and call it. Again, y'all remember, we leaving doubt, we leaving fear, being undisciplined, not having a game plan. We're leaving all that in 2023. And we're making the leap to financial freedom in 2024. You hear me? Shout out to Spider Gang. We celebrating 1 year all January. Speaking of, let's look and see if we got anybody that got their badges. It's January 25th. Let's see if we got anybody that got their badges. Get this out of here. I don't want to mess around there. Share the wrong stuff. Sometimes it be showing personal information. Then you be like, oh, wait a minute. What is doing now? What that's doing now? What that doing now? What that doing now? Shout out Valentine pulling up the other night on the live. Appreciate you. All right, let's go down. Nope. Yep, we still at the same ones. We got a few on the cusp. We got a few that's at 11 months. Quite a few that's at 11 months. We'll see if we're gonna hit. If they're gonna hit before the end of January or where they hit in February. No matter when they hit, I appreciate y'all, man. I appreciate y'all. You hear me? Hey, man. Take advantage of today while you have the opportunity. Let your loved ones know how much you care about them, man. Let them know that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. Worst thing in the world is trying to communicate with somebody that you love them and they're not receiving it because you're not speaking in their love language. Open up the lines of communication so you'll understand their love language and they'll understand yours. And y'all know how to give and receive love, or give and reciprocate, however you want to look at it. Do me a favor tonight, right now, immediately after this live, go in the other room, hug your spouse, kiss your spouse, say, I love you, baby. Hug your child, hug your children, hug your dog, your cat, your gerbil, your turtle, your ferret if you have one. Call up your parents if they're still living. Hey, mom, hey, dad, I love you much. Right? Take advantage of the day. Nobody's promised tomorrow. I appreciate y'all, man. As always, let me make sure this time I get ready. Discord, I see you when I see you. I'm disconnecting. Now, for the live stream, we not going to have the debacle that we had today. Until the next time I decide to get on Algo's internet and share my thoughts, it's your boy, Aranya Grande, a.k.a. Big Spider. Y'all be safe out here in these trade streets, man. Gone. Yeah.